Welcome to the Deep Dive, the show that cuts through the noise and gets straight to the insights you need. Today we're diving into TTM Technologies, ticker TTMI. And we're asking, well, a pretty big question. Could this company, sitting right at the intersection of explosive AI growth and, frankly, escalating geopolitical tensions, could it offer a truly durable advantage? Or is the market already pricing in, a decade of perfection? Stick around, because we're about to unpack everything. And speaking of insights, if TTM Technology is on your radar, definitely make sure you're subscribed to Stock Analytics AI on YouTube. We'll be covering their earnings literally within minutes of the release. You won't want to miss that rapid update.
That's exactly right. Our mission here today is to give you a really comprehensive understanding of TTM Technologies. This is a company manufacturing essential high-reliability components. This analysis is current as of August 8th, 2025, and TTMI's share price was $45.28 on that day. Our goal, really, is to give you a shortcut. A shortcut to being well-informed, pulling out the most important nuggets of knowledge, maybe some surprising facts from all the sources we've gathered for you.
All right, let's peel back the layers then. Let's understand what makes this complex business tick. We're starting with Chapter 1, Business Understanding.
Okay, so TTM Technologies operates with a strategically diversified business model. It's basically split into two main areas. You've got printed circuit boards, PCBs, and then RF and specialty components, which we'll just call RF&S.
CCBs, right. The core boards and almost everything electronic.
Exactly. The PCB segment is their foundational revenue driver. Think of PCBs as, they're kind of the intricate nervous system for virtually all modern electronics. They're the backbone that lets microchips and other bits talk to each other. And TTM covers the whole spectrum here, from rapid prototyping for really cutting-edge designs all the way to high-volume mass production.
Okay. And the other segment, RF&S.
Right, RF&S. Now, this is where TDM really pushes into more specialized, higher-margin engineered solutions. These are definitely not your everyday commodity parts. We're talking about sophisticated high-frequency RF components, complex RF microwave and microelectronic assemblies, sometimes even complete radar and mission systems.
So really high-tech stuff for demanding applications.
Precisely. Things that need extreme precision, signal integrity, think advanced radar and defense systems, or the infrastructure that powers 5G, and they serve a pretty vast global customer base, about 1,400 to 1,500 clients. That includes major OEMs, electronic manufacturing services providers, and crucially, government agencies, especially in defense.
So this isn't just about making basic circuit boards. It really sounds like a very deliberate evolution, almost like a multi-decade transformation they've gone through.
Absolutely, and that's a really crucial insight. Their multi-decade strategy. It's been a masterclass in strategic evolution, really. They've systematically built out their capabilities. Key acquisitions like Tyco's PCB group back in '06 got them into aerospace and defense. Later, Anaren and Telephonics really boosted their RF and radar systems expertise.
Okay.
But just as important was that bold move in 2020, divesting their lower-margin mobility business, the part exposed to the very volatile smartphone market.
Right, I remember that.
Yeah, and that move wasn't just a pivot, it was a calculated decision. Shedding commoditized businesses to laser focus on these high-reliability, high-barrier markets, that's really how they've engineered their current position.
That's a clear vision for where they want to play. So what specific products are they actually making that embody this high-value approach?
Well, on the PCB side, they really master the art of fitting more computing power into smaller spaces. So things like high-density interconnect or HDI PCBs essential for miniaturization. They also make flexible and rigid flex PCBs. These allow for, three-dimensional designs, letting electronics bend and fold into tight spaces.
Oh.
And through their i3 electronics assets, they've added substrate-like PCBs, SLPs. These are so tiny and dense, they almost blur the line between a circuit board and a semiconductor chip itself, packing more power into, say, pocket-sized devices.
Wow. And the RF&S side?
In the RF&S segment, their products range from specialized RF components for things like 5G and military communications, all the way up to full radar and surveillance systems. Think maritime use or identification friend or faux systems IFF. And beyond just selling the components, they offer valuable services like collaborative design, engineering support, positioning themselves as more of a one-stop shop for complex solutions.
Given that breadth then, what's TTM's core promise to its customers, their main pitch?
Well, their name, TTM, literally stands for time to market, and that's their primary value proposition. In the fast-paced electronics industry, getting a product to market quickly is just a massive competitive advantage. Think of it like a Formula One pit crew. TTM helps their customers get their new products onto the track faster than anyone else, simplifying that whole process from concept to mass production.
I'm curious, how exactly does TTM's specific expertise tie into the bigger picture of, say, the explosion we're seeing in AI infrastructure
Yeah.
or new defense initiatives? Can you kind of connect those dots for us?
Yeah, absolutely. And that's where it gets really interesting. TTM is positioned almost perfectly at the confluence of several powerful multi-year secular growth trends. The explosion in artificial intelligence and data centers, for example,
Yeah.
that directly drives demand for the really complex high-layer count PCBs. Then you've got 5G and the Internet of Things, which require their advanced RF components. Automotive electrification and autonomy means more sophisticated, durable PCBs in basically every vehicle. And aerospace and defense modernization is a huge driver. Next-gen electronic systems, things like AOC radar, they rely heavily on TTM's specialized expertise.
So that 2020 mobility divestiture looks pretty smart in hindsight then.
Incredibly prescient, yeah. It aligned them perfectly with these durable growth drivers, and that's directly led to their record 2025 revenue and earnings. Now, as for the competitive landscape, it is intense. They compete with publicly traded firms like Fabrinet, Sanmina, Plexus, and also global PCB giants like AT&S and Unimicron. It really boils down to technology, quality, price, and speed.
And what about the regulatory environment?
Mm-hmm.
Especially for companies so tied into defense contracts. Does that act as more of a hurdle or maybe a strategic advantage?
That's a great question. For TTM, it's definitely a strategic advantage. As a defense supplier, they face really strict government and cybersecurity regulations. A major achievement came just recently, August 2025. TTM secured the Cybersecurity Maturity Model Certification, CMMC Level 2.
CMMC Level 2, okay. What does that actually mean?
It means it's becoming mandatory for pretty much any company in the U.S. Department of Defense supply chain. So it creates a significant regulatory moat. It effectively excludes smaller or less sophisticated players. It's a huge barrier to entry, protecting their market position.
Right.
And actually, barriers to entry are formidable across their business. Beyond CMMC Level 2, you just need massive capital investment and deep technical expertise to make these advanced PCBs. Certifications in aerospace and defense and medical are incredibly rigorous. And once you're designed into a long lifecycle platform, customers face prohibitively high switching costs. That creates a very, very sticky customer base.
Right. Hard to switch out once you're in.
Exactly. Plus, you need scale and a global footprint to serve multinational OEMs, which TTM certainly has with its 23 specialized facilities globally.
So their core competitive advantages really go beyond just making a good product.
Oh, absolutely. Their brand strength, built on reliability and that time-to-market promise, is key. They are the undisputed largest PCB manufacturer in North America. That scale gives them significant economies, leading to cost advantages in procurement, spreading R&D costs, and those high switching costs we just talked about really protect their revenue base.
Okay.
Finally, they possess genuinely unique assets and capabilities. A comprehensive technology portfolio from advanced PCBs right up to full RF subsystems and radar. They hold around 100 patents. And crucially, that significant North American manufacturing footprint. This is increasingly vital amid geopolitical tensions and supply chain security concerns. Their recent investments in Wisconsin and Penang, Malaysia, only emphasize this forward-looking strategy for geographic diversification, allowing them to serve global customers with local solutions.
Okay, so we've got a good sense of the business itself. But who's steering the ship here? Let's turn our attention to Chapter 2, Management Evaluation.
Yeah, the story of TTM's recent success largely revolves around the CEO, Thomas T. Edman. He's been at the helm since 2014. He's widely credited with, well, transformative leadership, disciplined acquisitions, those key strategic divestitures we mentioned, particularly that bold 2020 mobility sale.
Right.
He successfully pivoted the company towards these high reliability, high growth markets, and that's really led to their record performance in 2025. However, there's a significant near-term event, one that introduces some uncertainty. Edman intends to retire. That was announced July 30th, 2025.
Oh, okay. So leadership change is coming.
Exactly. The board is searching for a successor. Expected by year-end, Edman will stay on as CEO until then and then continue as a director. But, the departure of a CEO with such a strong track record is always something to watch closely, even though it's being framed as a very orderly succession.
And how are they on communication?
Yeah.
Transparent.
Yeah, generally very high transparency with investors, detailed financial results, clear guidance, regular calls. Internally, the executive team has a B+ rating on comparably from employees, which is, generally a positive sign for employee sentiment.
How have they been allocating capital under this leadership? Are they spending aggressively, or are they maybe more conservative?
Their capital allocation seems very clear and disciplined, guided by what they call diversification, differentiation, and discipline. M&A is highly strategic, focused on acquiring specific capabilities like Anaren and Telephonics. And they're definitely not afraid to divest, as the mobility sale showed.
Right.
They're also investing heavily organically. CapEx, capital expenditures, jumped significantly. $60.2 million in Q2 2025, up from just $10 million the year before. That's mainly for building out those new facilities in Malaysia and New York, investments for future growth.
Okay. And what about shareholder returns, dividends, buybacks?
They don't currently pay a dividend. They choose to reinvest profits back into the business. They do use share repurchases, though, as a flexible tool. There's a new $100 million program authorized through May 2027. They bought back about $17.9 million in the first half of 2025. Their CFO, Dan Bohl, he made it pretty clear. Strategic acquisitions remain a primary goal. That really defines their capital allocation hierarchy.
And what about efficiency? How well are they using that invested capital?
Right, so their normalized return on invested capital, or ROIC, is 7.37%. ROIC basically tells you how efficiently a company is using its invested money to generate profits. 7.37% is, well, it's reasonable. But improving that will likely be a key task for the incoming CEO, showing they can get even more bang for their buck, so to speak.
So we've seen the business strategy, the management's track record. Now, what does this all mean for the numbers? Let's dive into Chapter 3, Financial Analysis.
Okay, the numbers. As of August 8, 2025, TTM Technologies has a market cap around $4.68 billion, so solidly mid-cap. Looking at revenue trends over the past 5 years, you really see an inflection point. After a dip in 2023, some macro headwinds, portfolio reshaping revenue rebounded strongly. It went from about $2.1 billion in 2020 up to $2.44 billion in 2024. That's 9.4% growth year over year.
Pretty solid rebound.
Yeah, and for the trailing 12 months leading up to mid-2025, revenue hit $2.65 billion. That's an impressive 11.65% year-over-year increase.
Right.
It really shows their strategic pivot is paying off on the top line.
And profits, margins keeping pace.
They are. Profit margins have clearly expanded. Gross margin improved from just over 17% in 2020 to about 19.5% in 2024. More impressively, their non-GAAP operating margin in Q2 2025 hit 11.1%. That's a 2.1 percentage point jump year over year, and it marked their fourth consecutive quarter of double-digit operating margins.
Okay, non-GAAP. What about the standard accounting, the GAAP numbers?
Right, so GAAP net margin has seen some volatility. There have been non-cash charges, things like intangible amortization from acquisitions, restructuring costs. That's made GAAP EPS inconsistent, even showing a loss in 2023. But their non-GAAP EPS tells a more stable story. Consistent positive earnings, $1.28 up to $1.71 between 2021 and 2024. For a company with a lot of M&A activity like TTM, those non-GAAP figures, and looking at free cash flow often give you a clearer picture of the underlying operational performance.
And free cash flow, how's that looking?
It's been consistently positive, but volatile, partly because of that increased CapEx for the new facilities, which is obviously an investment in future growth, but it temporarily suppresses the cash flow number.
How does their balance sheet look then? Are they financially stable enough to weather storms or maybe pursue more acquisitions?
Oh, very much so. Their debt-to-equity ratio is quite conservative, 0.56. That means they're financed more by equity than debt, giving them significant financial flexibility. Their current ratio is excellent, 2.03. That indicates really strong short-term health and liquidity. And as we noted, no dividend, prioritizing reinvestment.
Okay, so based on all these numbers, what do they tell us about TTM's valuation? Is the market already pricing in, a perfect future here?
Yeah, let's talk valuation. Now, if you just look at their past earnings, their trailing price to earnings, or PE ratio, it is quite high, ranging from, say, 49 to 61. That's well above their 10-year average of about 24, and definitely a premium to their peers.
That does sound steep.
It does on the surface. However, their forward PE, which is based on Wall Street's future earnings estimates, is a much more reasonable 17.8. This suggests the market is clearly betting on substantial earnings growth coming through to bring that multiple down significantly. The whole investment thesis really hinges on whether they can actually deliver that aggressive growth.
Okay, so trailing high, forward, more reasonable. What about intrinsic value? Trying to estimate its true underlying worth.
Right. For intrinsic valuation, we used a discounted cash flow, or DCF, model. The idea is to estimate a company's true value by projecting all its future cash flows and discounting them back to today. Our educational DCF model estimates TTM's intrinsic value somewhere in the range of $36 to $44 per share, which interestingly is pretty consistent with other analyses, like simply Wall-Street's estimate of $36.10.
And what are the key assumptions behind that $36 to $44 range?
The key assumptions for our model were a 6.1% free cash flow growth rate for the next 5 years, that's based on analyst forecasts, then a conservative 2.5% terminal growth rate, basically forever, and a discount rate of 9.0%, reflecting the company's stock beta, its market sensitivity of about 1.5.
That's a lot of crucial financial data. Okay, moving on, let's look at Chapter 4. Market sentiment. How is the street actually viewing TTM Technologies right now?
Well, Wall Street's expectations for TTM have been quite bullish lately, and importantly, the company has delivered. For Q2 2025, announced back on July 30th, the consensus was looking for about $668 million in revenue and $9.52 non-GAAP EPS. TTM blew past that. They reported $730.6 million in revenue and $9.58 non-GAAP EPS. That's a significant beat, 9% on revenue, 11% on earnings per share.
Wow, okay, big beat. How did the market react?
Very positively. It led to upward revisions from analysts pretty much across the board. And for Q3 2025, management's own guidance is optimistic, and the current Wall Street consensus aligns perfectly with that, so confidence seems high for the near term.
And what about price targets? Where do analysts see the stock going?
The consensus rating is overwhelmingly a strong buy. After that Q2 earnings beat, firms like Needham and Truist raised their targets. The consensus 12-month price target range now sits between about $52.25 and $57.88. Some bullish targets go as high as $63. From the current price, around $45.28, that implies, in their view, a potential upside of roughly 15% to 28%.
So very positive analyst sentiment. What's driving that beyond the earnings beat?
Well, the record Q2 earnings are the main driver, no doubt. But also that critical CMMC Level 2 certification we talked about that reinforces their competitive moat in aerospace and defense. While the CEO retirement announcement did introduce some uncertainty, it was largely muted by the strong earnings report and the fact that it's being framed as a very orderly succession plan.
What about broader market indicators, like short interest, moving averages? Do those confirm the bullish sentiment?
Generally, yes. Short interest is low, somewhere between 3% and 4.3% of the float. Only about 1.6 days to cover, which means it wouldn't take long for shorts to buy back shares if they needed to. The trend in short interest is declining too, indicating very little conviction among short sellers that the stock will fall.
And technically, where's the price relative to key levels?
Technically, the stock at $45.28 is trading just slightly below its 50-day moving average, which is around $46.58. That might suggest some short-term consolidation or maybe a brief pullback after the run-up. However, it's significantly above its 200-day moving average, which is way down in the $27, $29 range. That confirms a very strong, established long-term uptrend is still in place.
Okay. Next, let's peel back the layers on Chapter 5. Ownership structure. Who actually holds the keys to TTM Technologies? Who owns the stock?
Right. Ownership is heavily dominated by institutional investors. They hold an extremely high 98.5% of the share.
98.5%. Wow.
Yeah, it indicates really strong confidence from professional money managers. Top holders include the usual giants: BlackRock, Vanguard, Dimensional Fund Advisors. Now, this high institutional ownership provides a generally stable shareholder base, but it also means that decisions by just a few large fund managers could disproportionately impact the price or liquidity.
That makes sense. What about insiders, management directors? Are they holding much?
Now, here's where it gets quite interesting, and it creates some tension with that bullish external sentiment. Insider ownership is relatively low, only about 1.3% to 1.8%. But more notably, over the last 6 months, there has been consistent and significant insider selling. We counted 17 separate occasions of insiders selling shares, with 0 corresponding buys.
0 buys, but lots of selling.
Exactly, including an officer selling 15,000 shares just days ago on August 5th, 2025. This divergent, strong external optimism from Wall Street, but consistent selling from insiders who presumably have the most detailed view, that's a key point for you to consider. It could suggest insiders feel the stock, after its powerful rally, might be fairly valued now, a potential red flag, perhaps.
That's a crucial piece of information, definitely something to weigh. Okay, so how does TTM navigate the future, especially with all these macroeconomic and geopolitical factors swirling around? Let's explore Chapter 6, Risk Assessment.
All right, risk. We look at a quick SWOT analysis: strengths, weaknesses, opportunities, threats. The strengths are pretty clear: market leadership and scale. that advanced technology portfolio, their entrenched position in aerospace and defense, fortified by CMMC Level 2, diversified end market exposure to growth trends like AI, 5G, EV, defense, and of course, that strong balance sheet.
Okay, strong foundation. What about
And
weaknesses?
Well, the leadership uncertainty around the CEO's retirement is definitely a primary concern right now. Their GAAP profitability, as we discussed, has been inconsistent due to those non-cash charges. And that consistent insider selling we just highlighted, that's certainly a weakness, or at least a point of caution. Another thing to monitor is their moderating order book. The book-to-bill ratio dipped to 0.89 in Q2 2025. Now, anything below 1.0 can sometimes signal slowing growth ahead, so that warrants watching.
But the opportunities sound pretty substantial, especially given the current global landscape.
They really are. The continued secular growth in AI infrastructure, 5G, electric vehicles, defense spending, that provides a powerful tailwind. A major opportunity, maybe underestimated, is the global trend towards supply chain diversification and onshoring manufacturing. This significantly benefits TTM's big North American footprint and their new Malaysian facilities as companies actively seek to de-risk their supply chains. Plus, their strong balance sheet positions them well for potentially more accretive M&A down the road.
And the threats, what keeps them up at night?
Well, they face economic cyclicality, particularly in markets like automotive and industrial, which can be sensitive to downturns. Competition remains intense, and there's always supply chain risk, especially around raw materials. Macroeconomic factors like inflation could pressure their costs and margins, higher interest rates could dampen demand for some end products or increase their borrowing costs.
This brings up an important question. How do geopolitical factors, specifically things like the new U.S. tariffs implemented in 2025, impact a company like TTM, which operates globally?
Yeah, this is a fascinating duality, and it's really where TTM's strategy might shine. So those new sweeping U.S. tariffs, a baseline 10% on most imports, with talk of up to 100% on foreign-made semiconductors and electronics, the clear intent is to incentivize reshoring manufacturing back to the U.S. or allied nations.
Okay, so a potential headache for their Asian operations.
On one hand, yes, it could be a threat, leading to higher costs for their Asian operations, but on the other hand, it could actually be a powerful tailwind for TTM. As the largest PCB manufacturer in North America, TTM is kind of uniquely positioned as a solution for customers desperately seeking to de-risk their supply chains and avoid these punitive tariffs. So paradoxically, these tariffs could accelerate and validate TTM's long-term strategy of bolstering its domestic production capabilities, making them even more indispensable to their customers.
Interesting. A threat that could also be a major opportunity.
Well,
Okay, let's bring it all together for our final thoughts in Chapter 7, Conclusion.
Right, wrapping it up. The bull case for TTM Technologies is, frankly, very compelling. They're excellently positioned right in the middle of powerful secular trends, AI, 5G, aerospace, and defense. They hold industry leadership, protected by high barriers to entry. They're showing accelerating revenue growth, expanding profit margins, and they boast a really strong balance sheet. And that geopolitical push for onshoring, it's potentially a massive tailwind playing directly into their North American manufacturing strength.
Okay, that's the bull case. What about the bear case, the counterarguments?
The bear case brings some important considerations. First, that valuation. On a trailing earnings basis, it does appear stretched, suggesting maybe much of the optimism is already priced in after the stock's tremendous run. Second, the significant leadership uncertainty with the CEO retiring is a real factor. Transitions aren't always smooth. And third, perhaps most notably, that consistent, heavy insider selling contrasts sharply with the bullish Wall Street sentiment. That's a divergence worth pondering. Plus, the recent dip in the book-to-bill ratio warrants monitoring for any signs of slowing growth.
So, bringing it back to valuation one last time.
Yeah, just to reiterate, our educational discounted cash flow model estimated TTMI's intrinsic value somewhere in the range of $36 to $44 per share. With the current share price at $45.28, it sits just above the high end of that estimated intrinsic value range. This suggests the market appears to reflect much, if not all, of the optimism surrounding the company's prospects.
So, the final outlook.
Well, the bullish case really depends on flawless execution, especially navigating this leadership transition smoothly and continuing that trend of margin expansion. The bearish case suggests there might be little margin of safety here for any potential stumbles or unexpected headwinds. It seems priced for continued strong performance.
This really raises an important question for you, the listener. In a world of accelerating technology and shifting geopolitics, how much premium should you actually pay for a company that seems perfectly positioned for the future? especially when the insiders, the people who arguably know the company best, seem to be heading for the exits. Something to think about. If you found this deep dive valuable, please do like and subscribe to Stock Analytics AI on YouTube. Members paying just €4.99 a month get priority deep dives on tickers they request. And over the next few months, we're covering all of the S&P 500 stocks. Members get exclusive priority access to those too. And if you just want a one-off deep dive on a specific stock, drop us a superfax. We appreciate the support.
And just a reminder, this analysis was generated by an AI system for educational purposes only. It should absolutely not be considered financial advice. Please always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions.